All right, good morning. It's Marco here again. Um, Marco on Markets, new YouTube channel. I'm going to go through my investing journey, and I had a sale earlier today. If you watch my previous video, Coles, I'll just bring that up on the screen. Yep. So we had Coles, which, how long did I have it for? Okay, so with Coles, I purchased that on the 13th of July, and then that sold earlier today on the back of an announcement. It was down 2% at one stage, and then it sold at 23.65, which was the 2% down plus 2% up, which is my margin. So I've been watching the market, and I think my next move is Commonwealth Bank. And it's been down about 1.5%. Based on the moves. Oh, it's dropped a little bit more, which is good. It's good when you want to buy, but the minute you buy, you want it to go up. So I'm just going to show you my little calculator. This is the calculator I spoke of before. So I just put in my trade. So it's going to be CBA. For this exercise, I'm just going to assume my parcel. Parcel size is $40,000. I don't really want to disclose how much I'm investing at this stage. So the number of units that we're going to purchase is going to be 40,000 divided by the current share price, which is $170.34. That'll be today. The unit price is that, so that's going to cost me 40,000 in consideration for the shares. That's a rounded number, so I'll make that a whole number, plus the brokerage, and then you get a total of that. My desired margin is 2%. The outgoing brokerage is going to be $44. The total selling price will be $40 and $920, and that means I have to sell for $174.12. So we just do a little fact check on that, see if that's reasonable. Jump on a chart. 174.12. So that's 174.12. So we're looking at trying to get back to that point. Like I said earlier, I'm not that confident about it, but even if it gets to 1%, it might be okay. It just depends on the time. Let's just quickly have a look at all the banks. One of my watch lists is called banks. So I don't really like these smaller banks, but I just have them on there out of interest. So Commonwealth's doing the worst. So I kind of like that, because I always figure, well, that's probably going to bounce back the best. I always focus on the percentage and not the actual dollars, because every share price is different. So 6 cents on Commonwealth is nothing. $2 on Commonwealth. If $2 was Bank of Queensland, that would be huge. But if you focus on the percentage, so let's have a look. CBA, I think I still like it. Let's just do a couple of refreshes. Yeah, I'm going to jump on. So we'll put it on at 170 and 30 cents. So 170 and 30. So I'm going to take that off screen. I'll put my order on. Oh, it's dropping a bit more. Okay. maybe I won't buy just yet. Yeah, look, I'm going to do it. 170.25. See if it holds. Sometimes you miss it. You think, oh yeah, I'll wait and wait. I'm just going to take that off screen. I'll put my order on. Buy order. CBA. It's going to come out of there. Conditional, no. Quantity, I just do value. Then you can just put in the amount you want to invest and it'll work out the units. Yeah, like I said, at this stage, I won't be disclosing the dollar value. But it's not worth putting us like $1,000. So, and this is just what I do. So the limit is going to be 170.25. Good until cancel. Review. All right. So how we're looking. Let's check it. $170.25. Yep. All right, so we'll place the order. So I've submitted my order, and then if I go to my watch list now, so the price has gone away, so it's increased now. So I'm probably going to be in the queue. Depth, so 170.25. So I'm in that bundle there. And then we'll watch it for a little bit. And so this is what happens if you hesitate too much. The price can get away on you. So now it's increased. So I've got the order on to buy at 170.25. And now the price is increasing. Okay, so it's coming back now. We'll just stay with it for a couple of minutes. Otherwise, I'll just leave it and then hope that it does drop back down. Now, that 170.25 is close to the low for the day. So I may have missed my opportunity. And see, this is the problem. Once you decide to buy, if you don't get it straight away and it starts to get away from you, then you're in this bit of dilemma, like, do you increase your buy price or not? Do you just stand still? And, it can happen, you miss, and next thing you know, by the afternoon, it could be in the positive and you've missed that whole 1.5%. It's a tough game. All right, let's see if it goes up. Right. So now it's increasing. And so I've probably missed my opportunity for today at that price. So now if you have a look at the depth, I'm all the way down here now. So all these prices have to sell first. And now it's really getting away, 263. So I could have purchased at 25. I missed it, and now it's 63 cents. Look, it's not a train wreck. We're talking about, instead of 1.6, it's 1.4, so it's 0.2%. But when you're going for a 2% margin, 0.2 is 10% of that margin. So as you can see, it's really starting to get away now. And you have to make a decision. Do you just leave it, get back to work, and hopefully it purchases, or do you just miss it? It's really important to buy at a good price, because if you buy too high, then it takes longer to get out, you know. Look, I'm just going to stand still on it for now. So now it's sort of bouncing around. So 170, 70, 68. But yeah, I will just get back to work. Thanks for watching. Just remember that this is only for, educational purposes and entertainment purposes only. Do your own research. Don't invest based on what you see on a YouTube channel. Speak to a professional advisor, and you have a great day, and I'll try and touch base later if the trade goes through. Have a good day.